All right, I have a calendar and Palantir. I bought the 145, expires August 15th, and I sold the 145 that expires this Friday. I had a little bit of a challenge pricing these in terms of IV. I was looking for something in particular uh, related to the SKU premium, and I kind of ran out of time. I didn't allow myself enough time. But they have the earnings coming out in a few minutes. What did I pay for this? I think I paid $90 for this. And I'm looking for this IV to get crushed relative to the strike, the 145 strike that expires a week later. Roughly, let's say these are going for about 430, and the expiry on this Friday for about 335. So maybe the spreads, yeah, about 95 right now. Buy that, sell that. Yeah. So anyway, I'm looking for a bit of a crush. Earnings coming out. Let's see. Where am I? Palantir. Okay, so I get to blow this up a little bit. And let's see what happens. I have my handy Godel terminal up. I like to use. There are a lot of good features on this, by the way. I've had it for several months. I don't remember how long I've had this, but there are a lot of good features on this. I recommend checking it out. I also have a link if you're interested in that. But I love the modules that they have for quotes and financial information lookup. They also have the options chains available, and I get the pre-market activity. So this is I do like it a lot. I don't remember what I'm paying for it. It's not. They might have a free version with limited access and limited features, but it's definitely really cool. The command line interface is cool. I like that, and they're providing pretty stiff competition for Bloomberg Terminal at a hell of a lot cheaper price. Anyway, that's what I have cooking in Palantir. We'll see how this works out. Right now, looks like nothing's come out yet, but give it a few minutes and see how it goes. I paid about 90 for this. What did I do? 88. Okay, so I paid 88 for it. And again, I'm looking for this to get crushed. Obviously, if Palantir goes down near these prices and this gets crushed, then this will end up being a decent little trade. But for now, all I have to do is wait. I considered selling the straddle that expires this Friday, but I didn't want to take on that much risk. The strangle, which people think is riskier, I think this was, or which people think is less risky. So let's say I went out 17 and a half on this. So let me go out to 45. Is that right? 17 and a half. Okay. So this is available. I considered this, but I didn't want to do this either because if there's a huge move one way or the other, then when things go wrong with the strangle, they go really wrong, and it's not good. It ends up being much, much worse than when things go wrong with a straddle. So we got a little bit of a rally here. Just rallied $10. Palantir rallied $10. Came off about $5 or $6. But anyway, that's something to think about. I recommend looking into it. Selling a strangle versus selling a straddle. As I said, one of the hints that I'll drop is that when these go wrong, they go real wrong. Real wrong. It gets ugly fast, and it gets real ugly. So that's something to keep in mind if you're considering a strangle versus a straddle. All right, that's going to be it. Let's see what happens. I gotta go. Anyway, I gotta go. Catch you guys next time. Okay, so I wanted to do a quick follow-up on Palantir. Earnings came out, and it's trading about about $4.50 higher than today's close, $12 higher than yesterday's close. Now, it did shoot up once the earnings came out, and let's see. So let's take a look at a chart real quick. Shot up. I did see a 172, I believe. So it got up to touch 172. Dropped. Right after that, I saw a quick drop of almost $10 down to 164. And since that, which was 120-ish, it's been sitting. I'm sorry, that was actually quite a while ago. I'm sorry, I got the time off on that. So it shot up right away, and then it did dip down at about 1:15 p.m. Pacific time. Did dip down by about $7-8 from the high, and since then, and it's currently about 230. It's 231 PT. Dipped down to 164 and up almost $3 since then. Quieted down, but the big move was to the upside. Now the straddle, the at the money straddle was priced at about 1950, and that's off of the 162. That was off the 162. 162 and a half. It was off the 162 and a half straddle expiring. The expiry is this Friday. What do we got here? So I do remember this 10 and a half-ish. So let's say I did see about at least 1950 right before the close, and I considered pulling the trigger on this one, but I opted not to. And as I mentioned, I did look at a strangle, and I was looking at the 180, 145, and that was going for roughly, let's see, I want to say about $6.50 maybe, 310 on the 180, and let me modify that a bit. Let's go up to down to the 140. 340. Okay, so off the ask prices, it's a little more than $7 for the strangle, and given current prices, the strangle's looking pretty good for now. We don't know what's going to happen overnight, and the straddle is also looking good. But I did mention that there's a lot of risk on the strangle well, there's risk in both, but when things go wrong, if there's an exaggerated move, a move of great magnitude to either side, then the strangles tend to get absolutely crushed, much more so than the straddle. And I do, again, recommend looking into that for yourselves so you can understand what I'm talking about. However, in exchange for that horrendous risk when things go wrong with the strangle, the strangles do make money more often than the straddles, and it could be, I don't remember, God, it's been a while since I looked at this, make money more often, but I don't want to say what the median profit level is, or the median profits are, strangle versus straddle. But I do know that the strangles, at least in the SPY and the SPOOs, emini futures, they will provide profit. They will provide profit, median profit. They will provide profit more often, and the median profit's probably a little bit better than the straddle. Now, in exchange for that, you get absolutely demolished on when things go wrong. Think about, I think it was 2 years ago roughly in the spring when Netflix was trading around 460, 470, and had earnings come out, and it dropped over $200. Imagine having a strangle on that day. You're just destroyed. Destroyed. Absolutely destroyed. That could be for a number of small accounts. Well, for any account, depending upon the bet size. That's an account killer. The whole account will go to dust. So that's something to keep in mind when you're thinking about doing strangles. And I'm not advocating one over the other. You just should be aware. You should absolutely be aware of the pros and the cons of each, and find the one that fits the risk profile that you're comfortable taking. All right, that's it for now. Let's see what happens overnight. Maybe we'll get I have a calendar over at the 145 strike, so hopefully for me, I didn't pay much for it, but we'll see what happens. Maybe it can go down overnight, and calendars in that area will look good. Okay, guys, I'll catch you later.